Hello, Warriors. Let's have a great week. Sinatra, Jays, how are you? Everyone have a good weekend.
Morning, Dale.
Good morning, Kman. How are you?
Yeah, good.
Stel, how are you?
Glad the weekend is out of the way. We can work again, yeah?
Yeah, you know, I start jonesing Sunday. I'm ready. By then, aren't you?
Yeah,
you feel that way?
I'd like to get ready Sunday evenings and then see what the night brings, which it did.
Yeah. I mean, you know, definitely Macron victory, which was thinner, provided not much of a bounce. Are you seeing my Euro chart here? Kman?
Yeah, we see the chart.
Okay, so new lows. All I could say is, okay, people are probably a lot more bearish just because it took out this low by 30 pips, which I don't know how justified it is. I still think we're setting up a bottom. It takes time for it to develop. Look at this RSI on the daily.
Yeah, it's mainly China who took the whole market for a ride.
You mean the yuan?
Yeah, the Chinese yuan really dumped. Well,
Yeah.
I was off on Friday, but it already went a lot lower on Friday, and then it weakened another another 1.5% overnight. So it took the rest of the market for a ride. Aussie got smacked. Sterling is wrestling with its own problems and Bojo and whatever, and the numbers weren't great either.
Yeah. I mean,
it looks, if you talk about the euro, that the euro is coming down rather in sympathy with the rest, or actually sympathy with the rest of the dollars, really.
Yeah,
euro crosses are holding or even a tad higher versus the higher risk.
So could that be a little bit of a tell? I mean, you know, this is the second lower low in euro, and this time actually euro pound, you know, performed. So last time it held 78.6 back. That was that was a week or so ago right here. So it looks like it's on the verge of clearing major resistance up here at 84.5.
Yeah.
But I'm sure you're focused on BOJ. What day is that this week?
It's Thursday. Is the 28th. So 28th, yeah, Thursday. Yeah.
Okay.
Well, the night, your Wednesday evening.
Okay. What do you think you're going to say?
It's a bit. I'm starting to think Kuroda is talking a bit split tongue language. I think they might be doing something. They are not going to raise interest rates, but they might like widen the JGB band, the possibility. So widen it from 0.25% around 0 to, I don't know, maybe 0.5%. They could, on the other hand, also shorten maturities. So instead of pinning the 10-year down, they could pin the 5-year down. There's various possibilities. They could buy less ETFs, less REITs, but then looking at how the stock markets are behaving, I don't think that's going to be their biggest or their main focus. But there might be something, despite what Kuroda has been saying over the past week or so. They are going to continue easing. They are going to be way behind all the other central banks, but they might be doing something. So in reply to Mike's question, if they do something, we at least short term, we might see a knee-jerk reaction in the yen, but then it depends what they are doing.
Well, both yields are down with the yen today. And that's a pretty good decline, 9 bips on the 10-year.
Yeah. The yen crosses are weaker. Huh?
Yeah, they're weakening here.
Yeah.
So I don't know. I noticed Jay's is looking for 103 in the dollar index, and he could be right. I mean, you never know how far a rubber band can stretch. But right now, I would say it's a stretched rubber band when I look at momentum indicators. So. And I think crypto's under a lot of pressure. I was reading.
It's under pressure. We're back. Bitcoin is back on the BlackRock support.
Yeah, they came out with something at 38,000.
Well, I mean, the
39.
CIO 1 week and then the CEO the other week, every time we were around this 38, 39K, said that they were studying possibilities for their customers and studying this and trying this and that. And I reckon in the background they might be on the beat at certain levels, and then all of a sudden their next report showing that they have like a few percentage of Bitcoin because their study showed that it was a good idea, perhaps.
Okay. Crude under pressure headed towards a descending triangle line.
Yeah.
The weak sister silver took out the 24 level.
Yeah. As I was saying earlier, that China took us all for a ride. They now closing certain areas of Beijing, and the market got really scared of that. So I reckon it's not going to help commodities if China is going into more lockdowns.
Yeah, gold hasn't gotten to it yet. Crude, here we are. I don't think it looks great. I don't think gold looks great. I've asked certain people what could take WTI down to 80, and I can't get a good answer except demand destruction. And, no one sees new supply coming on. In fact, even Russian production is down. I guess it's hard to fight a war and keep your oil production up. So I don't know. It's, I've been saying it for a few weeks or a month. In fact, I think Blake said, well, is that what you want for your birthday, is commodities to come down and have a breather in the commodity market? And my birthday's still a month away. So I got it a little earlier.
So you want oil at $80 for your birthday?
No, I was looking for commodities to sell off.
Okay.
So anyway, so they are. The Aussie, you would think you'd be looking for a place to buy this Aussie with it, probably at 61.8 or so. I mean, compared to things like the euro, it's putting in new highs. I'm declaring today the low in the euro. I'm declaring it, and
that's risky.
What's the worst that could happen if I'm wrong? My declaration was wrong. Oh, that's what you meant, declaring it. No, I have some skin in the game here, so
I still would like it a bit lower, though. I still got puts running, so.
What are you looking for? I mean,
I'd be a very happy man if we go anywhere close to 105, 104. I'd be very happy to cover everything and perhaps go the other way around. I think there is this risk once Fed effectively does the QT
next week.
I don't know what's going to happen when they raise rates, because that's now completely in the market, right? I mean, okay, if they go 75, there might be another one, but if they do twice 50, I think it's relatively priced in. But I want to see what this market does when they effectively go quantitative tightening.
Okay.
Because that could be the last leg of the dollar higher, where it then going to give us really good levels to trade the other way around.
Yeah, there's the monthly on the dollar. So you could see how the super dollar bulls can say, you just take this as a formation that's breaking out from 87.5 to par. That's how they get 120 or so, based on this, the milkshake theory, Brent Johnson, and guys like that. Okay, Paul's looking.
I leave the Dixie to the American watchers. The only Dixie I know are the Dixie chicks, the
yeah. And
right.
I don't know. What do you think? S&P's what a break last week from the 4,500 level.
Yeah, I mean, I think good morning, everybody. I think risk is still looking weak. And we've been saying this, yes, yields are coming back a little bit now, but there's still so many things. It's not just higher yields. You correctly said the situation in China is probably driving a lot of this risk lower, because there's going to be, if they start locking down, which they already are, I think, but they start locking down big chunks of China, then this demand is definitely not going to be there anymore. But stocks, stocks have to. I've been saying it for a while. Stocks have to go lower. The only thing that the Fed, I think, is looking at now is equities, and they're going to be sensitive to stock levels, even though they tell us they're not, or actually they haven't told us that, but they're not supposed to be. They're going to be sensitive to that, I think, and I think the S&P is still some way away from them taking notice. If you look at the S&P chart, we've got there you go. You have these lows around 4,100. I mean, if those get taken out, it's good night. I think we can go easily to 34, 35, 3,600 before the Fed steps in. And
where was the S&P when the pandemic hit?
When who hit?
When the pandemic hit, where was the NFP? Around 3,000, right?
3,400 roughly.
Right here.
I can see the top here. Yeah, 3,400.
This was the pandemic.
Yeah.
So pull back to the
pre-pandemic
high.
Yeah, absolutely.
I don't know, but like a reasonable percentage pullback could be, if this China situation is not going away soon.
Yes. Now you talked about the euro. We did have Macron winning, and we were saying from the beginning that it's difficult to see how Le Pen could have got the majority. Actually, I read a poll which was really interesting. They polled apparently a big chunk of Macron voters, and they said, why did you vote for him? And the two answers were, A, because we think he's going to do a good job, and B, it was because we don't want Le Pen to win. And I think it was something like 92% said we don't want Le Pen to win. So it was like the lesser of two evils. But the English bookies had our friend Simon noted that in the chat room they had roughly 95% chance of Macron winning. So I don't think there was really any major risk for Le Pen winning. And I think the euro showed that, we've rallied overnight just a little bit, and then bam, we're just lower again. But this is all on the back of the general situation, China and Ukraine and everything, and risk off and everything. So
copper getting hammered.
Yes, all commodities are getting hit now, and this is the knee-jerk reaction. When you have big uncertainty, that's a knee-jerk reaction. Dollar rallies, yields go lower, and commodities and commodity currencies get smacked, and this is what we're seeing.
What does this tell you here on the gold-silver ratio?
Well, it's close to breaking out, right? And when we drop in levels, that ratio goes up. It's just the way it is. I am actually surprised that cryptos are not lower, because usually they outperform or underperform massively. And if you look at Bitcoin, we're still within this channel, and the lows are coming somewhere around 35,000 of that channel. And then, if we break that, we're starting to get, actually, that, if I'm not mistaken, that's the average of Michael Saylor's holdings. So he's going to start having issues below there. So, we're still, definitely not out of the woods, not by a long way in cryptos. And, if you're long, I think you need to be watching this channel, both in in Bitcoin and Ethereum. Ethereum, the channel support is probably somewhere around 2450 or something like that. So we still have some way to go. But I tell you what, you can be sure that as risk gets sold, everything is going to get sold with it. There's only going to be very few survivors. The question is, what gets oversold, given its fundamentals, let's say, or however you want to call it, that will give you a good opportunity to get long. This is exactly the same as we were looking at in COVID in 2020. Everything got sold, and there were some really great opportunities there. So you have to keep your powder dry and look for some good deals, let's say. But metals are definitely following suit. Silver, platinum, palladium. Look at palladium, down 6.5% today.
Yeah, I'm not touching silver right now either. To be honest.
That's the thing. I still have some core longs which are at the money at the moment or close to, but I want to see 22. I really want to see 22.
I even have 21 in my mind if the shit really hits the fan.
Yeah, could be. Yeah. Yes, you're right. Actually, we have these lows at 21.5. You're right.
Yeah.
You're right.
21. What was it? 2160s or so?
Yeah,
whatever it was, yeah.
2140.
Yeah.
One of the most hated groups in equities, which used to be the most loved, is the semiconductors.
Yeah.
And they look like they're setting up, coming down to maybe the bottom of a wedge. I might take a shot here for a bounce, but now everyone's just piling on semiconductors, and there's still demand and shortage for semiconductors, aren't there?
Well, there is, but you remember, they are the big names like Nvidia and all the others. They are correlated now with cryptos, right? Because that's one of their main usages. But you know how they are, and how algos work. Yeah, I think there's still a shortage, but as we said before, risk will take everything with it. It's like a tsunami, and you close your eyes and you hope for the best.
Okay.
Well, yeah.
We'll see if we get some type of bond rally. I look at junk, and I wouldn't be short HYG down here. It's almost tempting to buy it. So Paul's asking, how do you correlate anything to a crypto?
Good question. Yeah. Good question.
Well, it's been moving, I guess, people NASDAQ it's lately. So it's a chameleon. That's how you correlate it. It's a chameleon.
It is good. Hey guys, how you doing?
Hey, Blake.
Hey,
actually, one last thing I wanted to say: all these popular stocks that the young kids have been trading on Robinhood. You have Coinbase, you have ARK, Robinhood itself, Peloton, all that, all-time lows. And actually, no, ARK isn't all-time lows, but it's lows from the past. From since COVID, basically. So this is not looking
more
good.
Pain to come for ARK as well, mate.
Yeah, it's not looking good at all.
Nice short in the S&P, Steve.
Thank you.
Yeah,
you held it. Yeah, nice. How are you today, Blake?
I'm all right.
He's offended. I interrupted him.
Oh, okay.
No, I'm all right.
You want to grab this?
I was just busy doing some things behind the scenes, and I'm doing good. I just want to mention we have some pretty important earnings coming out this week. We have Microsoft this week. We have Apple this week. I think Apple's on Thursday, if I'm not mistaken. I think we have Amazon on Thursday. So some pretty big. Facebook is on Wednesday, and so I think we need to be watching earnings, and I think that's going to be the mover. And let me ask you this, and I don't know if Kman's still here. Is he still around?
I'm still very around.
Oh, okay. You are still very around.
He's very round. No, sorry, carry on.
He just said that, and that was that. You know what, Kman, I wouldn't put up with that. Let me just say that.
Yeah, but he's Greek. I mean, we bail those guys out every 10 years. So
hey, nobody bailed me out. Anyway, yeah.
So I was just noting, just like these big moves in the dollar. We had this Chinese triple R cut just now. I didn't think that China was going to be as aggressive as they are, with the Fed being as hawkish as they've been. And I think this. Let me ask you this: do you think that this was a big move by China overnight? Just like an hour ago.
I think it started on Thursday, Friday. Unfortunately, I was off, but. It started last week, right? When they closed like big parts of Shanghai.
Yeah.
And they've been holding the Chinese yuan strong for months.
Yeah.
Because to counter the rising energy and rising commodity prices, that much is clear, right? So and now they're letting it go because they don't want the yuan to be probably too strong, and it's tough to call right here, because this is already a decent move. If you look at from low 630s to 660, you're talking about 4% or so.
Yeah.
But I really want to reserve all my answers for once the Fed will start QT. If I thought these moves would happen because, as you know, I'm long dollar CNH, so I'm actually having a pretty good run on this. I'm long since mid and high 630s, but I really if it holds during the after the FOMC, I think we could go back to $7 on the dollar CNH. There is no too big issue to go back to 7.
So did anything that China did today, for the PBOC did today, that's not going to shake your confidence in your long dollar CNH?
No,
Okay.
not at all. It's the FX. They lowered the FX reserve requirement. So people, when they buy FX, they need to put 9% of it of those FX deposits that derive from it. So because people buy FX and then they deposit it in their account at the bank, and 9% of it they have to keep in reserves. Today they lowered it to 8%. But if it would have been in a market which is upbeat on risk, I would have gone out of my dollar CNH. But we are not in a market which is upbeat on risk, and so I think it's only like a little bit of a break on a bigger move.
Yeah. Okay. All right. Well, that's good information. Let me ask you guys this. The dollar's got obviously some get up and go, and the dollar continues to break out. One of the key risks, I think, to the dollar, the bullish dollar move that we've seen, is just this weekly trend line. But you can't deny the fact that the dollar has just been breaking higher. And last week it held some really important support. If you guys remember, talked about the importance of the 99.40, 99.77, which was, and you see that little dotted line right there, which was the 38% retracement. We held that really strong, reverse, took us right up into, new highs as we expected, if that support held. Now, the thing is the dollar index is really, really strong right now. Do you guys expect this strength to continue here? And why is the dollar so strong right now? I mean, we have this, I mean, you can say, yes, we have some risk aversion, and the S&P is obviously near some pretty key support. Here's our longer term head and shoulder pattern. You guys know this chart pretty well at this point. We're near some pretty key support ahead of really big earnings this week in the stock market. Does the dollar warrant this type of bullishness in the face of, the stock market being at really key support? Is it a fear of Chinese continued lockdowns into Beijing? What's driving this dollar, move at the moment? What do you guys think here?
Hey guys.
Well, and I wanted to ask, I see some comments. It's risk aversion, right?
Yeah, there's one, but there's also that Powell did not push back against any of the rate hikes. He said during the meetings, "Yeah, I'm not going to tell you what I'm voting for," but his words were really clear that he was one of those who are going to vote for multiple hikes. And I think then you compare what the dollar represents in the global market, which is still the biggest part, and regardless what other countries or parts of the world would like, it is still the biggest part. You trade a lot of dollars. So I think it's somewhere just a natural, and plus risk off, but just a natural fact of, okay, they are going to hike. It's the biggest central bank in the world. Do I want to be short dollars? I think it's just, do investors want to be short dollars right here and now? That's the question. And I reckon the answer is what we are seeing.
Yeah. Oh, okay. Well, let me ask you guys this. Stelio, Steve, we've seen the euro dollar break down below 107.40. I was long, stopped me out overnight, which I'm definitely not happy about. But, is the euro warranted down at these levels? I mean, we got what we expected with Macron, above Le Pen, but, the euro continued to break down. Did this shock you guys at all?
Not at all. I've been saying for some time that, in my opinion, Euro USD remains in a downtrend. I expected it to continue producing lower lows. I said that I wouldn't be chasing it though down here, but on the other hand, I don't want to be on the other side of this trade yet. I first want to see some kind of a big reversal before I even consider something like that. I think that the French elections was a non-event because it could practically have only one outcome based. I mean, those of us that live in Europe, I think anybody that follows political developments knew that. So I don't think that anything has changed for the euro. It's still in a downtrend because the dollar remains very well bid, because the ECB is still not even acknowledging the obvious issues with inflation, and that leaves it way behind the curve than anybody else is at the moment, and the Fed. And at some point, I think, yes, we're going to get a big reversal when the ECB is forced to acknowledge that, yes, something has to be done. But, you know, it's very hard to time that. Is it going to be next week? Is it going to be in a month from now? Is it going to be in 3 weeks from now? Who knows? I first want to see it happen, though, before I start looking for a squeeze in the other direction.
Well, I'll tell you what, Christine Lagarde does not sound hawkish at all whenever she speaks at all. And if there's anything that's going to drive currencies right now, it's straight differentials. What's up?
Isn't
Stel?
this odd because we're seeing inflation, the same kind of inflation, roughly in the eurozone and in the US? I was reading today Spanish PPI, 46.6% year on year.
Just these numbers are unreal. You're right.
They are unreal. So we're seeing, headline inflation in the eurozone is something like 6%. What was it the last reading? No, actually more. So was it 7.4? I can't remember. Anyway, 6 to 7%. Same in the US. Why is one central bank galloping ahead, doing stuff, hiking, and the other one is not? It's really weird. And I'm looking at Fed Fund futures, and the May meeting is on the 4th of May, I think. So it's very close to the beginning of the month. April, May Fed Fund futures is 45 basis points. So basically, take those 4 days into account. We're pricing 50. And then look at June as well. We're pricing another 50. These are two, big events that need to happen. And trust me, I think if China starts getting worse and we see more risk off, I think the chance of the Fed telling us, look, yeah, we want to be hiking, but we just want to take it a bit more slow. I think those are increasing.
You have to ask who has the better economy. Is it the US or is it Europe?
I think they're both crap.
Ryan, I didn't even know you were
both horrible.
Yeah, exactly.
They're both horrible.
Well, are they?
Is the answer? Yes.
Are you saying that the Europe would have a better economy than the US if you had to put your money on it? Who would you back to come out of this better off?
Basic question. Which part of Europe are we talking about? Would I put my money in Germany?
That's the problem.
Would I put my money in Greece? What's the question?
But I mean,
that's
the problem.
Eurozone as a whole. Yeah, I mean,
it's fragmented. There's no fiscal union there.
There's jobs growth in the US. There's inflation in the US. There's wage growth in the US, the likes of which you're not seen in Europe. So naturally, if you're talking about who's likely to be able to wear hikes better, it's the US over Europe, and that's what the ECB is scared of. They're scared if they hike too much, they're going to crimp what is already a weakening economy because of all the Ukraine and the situation.
If you ask me, the basic problem is that there is no justice does not work as it's supposed to. I mean, the first pillar of let's call it, democratic governments is dead. And I'm saying that because of the following. Lagarde is a lawyer, right? Isn't there any kind of legal liability for an institution, talking about ECB now, that has a single mandate, which is price stability, and is doing nothing when the target of price stability has been breached by 3x and is on its way to 4x? I mean,
I agree.
Aren't they legally liable for completely miserably failing at their job in a very obvious manner?
You can't be legally liable when you write the rules yourself.
Yeah,
but
that's a problem.
You've got to remember, I'm talking from an investor point of view. If you're an investor thinking who's going to come out of this better off, if I have to put my money in euros, dollars, pounds, yen, wherever, where is my money going to come off better?
Oh yeah, and
I'm
for
just saying
sure.
it potentially comes off better in the US than it does in the Europe, and that means you don't put your money in the euro, and hence why you're seeing a run. You know, you're seeing a dollar so strong. You know, forget today. Today is a bit of a very much a risk off on China and everything. But you know, we've been talking crap about the euro for weeks now. You know, I've wanted to buy it the same as Stel from the beginning of the year. I mean, euro sterling, that's doing all right. You know, the divergence trade is clear there. But euro dollar, we've been thinking this thing's been sucking for ages. And they even said last week, if Macron wins, you may get a knee jerk higher, but I wouldn't be surprised to see it back under 108 and heading lower from there. We all think it's crap. And that's
all right. Well, hey, guys, I hate to stop this conversation. And by the way, if you're a ForexAnalytix subscriber, just remember we do continue on in about 45 minutes with the ForexAnalytix community for the morning edge. But we have one of my favorite people to interview here is we have Katie Stockton. She's a great technician. You guys are going to really enjoy her. Make sure you stick around with her and Dale because Dale's going to be interviewing her. I just want to say thank you all for being here. Happy Monday to you. I hope you guys had a great weekend. If you guys haven't checked out the Trader Funding Program, make sure you do so and make sure you take advantage of ForexAnalytix. It's only $1 for 10 days. Jump in our chat room. You know, this is how active our chat rooms are. If you guys want to see everything in here. So all of us in here, it's a really, really active room. And we'd love to see you in the community. I mean, you know, be in a community where there's people talking about the markets, not talking about politics or religion or anything else. Come join us. We'll see you later. Thanks, team, for being here. Dale, it's all yours with Katie.
Thanks, Blake.
Right, like Blake said, don't isolate, collaborate. Thank you, team. And welcome back, Katie Stockton.
Thanks so much, Dale. How are you doing?
Great. Great to have you here. You have anything to add to the King Dollar discussion that you were listening to?
Yeah, I mean, it's really just accelerated, hasn't it? Can I share my screen today?
Sure, please.
All right, let's do it. I'll pull it up. I had the S&P 500 pulled up for obvious reasons. We'll have to get to that too.
Okay. All right.
In terms of the dollar index, I mean, the acceleration to the upside certainly exhibits positive momentum really across time frames. We need to contextualize it really long term. This is the monthly bar chart of the dollar index. And you can see a big trading range here with room to the upper boundary. That's back here. It's about 103.65 at its upper boundary. But for those of you who do track the DeMark indicators, you can see here a couple red arrows in this 9. What that tells us is over the next 4 months, we should basically see it sort of flatten out or just start to consolidate, digest its gains, if you will, meaning that we won't see a breakout from this range anytime soon.
Okay, it's not a sell. It's kind of a momentum signal that upside acceleration will stall out here.
That's right. Yeah. And sometimes you do see pivots with these signals, but I would assume that it's more of a consolidation, like a pause to refresh the up move. And noting that the other indicators like this monthly MACD for one are pointing higher and do support the uptrend. So we assume that we'll eventually get out of the range, but it looks like it will be delayed by consolidation when you look at these DeMark signals.
Okay. I know you really respect these DeMark signals because every time you're on, you bring them up. And how about reliability of these signals, Katie? Are there a lot of, would you say it has better than a 50% hit rate or for at least directionality?
Yeah, I mean, listen, like they really kind of fill a need in that we all have plenty of momentum gauges that can help us. But where we all tend to struggle, I think, is in terms of a sell discipline and knowing when these trends are exhausting themselves.
Right.
And this is where they kind of fit the bill, at least the ones that I use, which are called TD sequential and TD combo. So I think of them as an overbought, oversold measure that actually is coincident of inflection points. And of course, like anything, they don't always, work or they're not always timely. But I find that when you cross-reference them.
Right.
Yeah, like, you use the other gauges, you use support and resistance to try to reconcile the signals and determine if they're higher or lower conviction. And with that, we tend to have pretty good success in using them. I've not really formally back tested them. It's not the way I approach markets typically, but if you just even visually back test this dollar index chart, if you look at these nines, here's, some inflections, right? Here's a buy, when it's below the price bar, you can see some buy signals. Here's a sell signal here. So there's enough value in them, certainly, that I keep going back to them, as you know.
Okay. So, and you know what? It's not always the indicator. It's who's driving the car.
Maybe,
right?
Yeah.
I mean, you could have a left turn signal, and if you're oblivious behind the wheel, you're going to miss the signal or interpret it wrong. So
Yeah,
go ahead, Katie.
I was just going to say it's all in how you weight the signals, right? That you're either right or wrong. It's not just one indicator that has all the answers. It's how you combine them.
So are we getting the inverse in S&Ps where momentum should begin to slow around this 4,100 level as 4,150 as we approach very important critical support?
Yeah, the critical support for me is roughly 4,200. We can certainly widen that out a little bit based on the February lows. We are looking for a retest here. And by retest, we mean just a pullback the pullback to deepen at this point to these lows in here. And just on Friday, what we saw, this was kind of interesting and disconcerting. This Fibonacci retracement level, which was roughly 4340, was taken out. And when you see the 61.8% retracement taken out, then it tends to give way to a 100% retracement. That's 4157 and change. And that, of course, would take us back below the sort of support level that we've been watching for months now. And this is a really key level. So this 4200 is based on previous highs and lows on the chart, and also another Fibonacci retracement level that's longer term in nature. This is on the weekly bar chart. And you can see also, depending on the time at which it happens, it'll be at risk of breaking this cloud-based support as well. Indicators are looking pretty sad right now.
They are.
Yeah.
Okay. So risk off, dollar higher. I know that you've been in the business long enough that when we get some type of risk off that's really accelerating, that we should get some type of recovery in the bond market. I mean, the bond market, I just saw a tweet that HYG has lost a third of its value this year.
Wild, yeah.
Yeah. So
no doubt these are proper downtrends, and at the same time, there are some indications that we'll at least get a counter trend move to take advantage of, certainly in relative terms. So I'll show you a couple of things. This is on TLT. So this is the Treasury Etf versus the S&P 500 as a ratio. And you can see this just massive underperformance. And it did, really accelerate this year to date. But now we have some signs of downside exhaustion in that ratio to support a relief rally in relative terms, meaning a phase of outperformance by treasuries versus the equity market. It's kind of an easy call in a way to make right now. And then if you look at those trustee DeMark indicators, there was a sell signal on TLT back here. That was in April of 2020. And for the first time, based on that model, this week, we should see a buy signal. So it's, just something that kind of makes us perk up a little bit. We're not rushing out to buy treasuries here until we see some improved momentum behind them. We always like to see that confirmation, but it looks like it may be heading that direction.
So the whole world, Katie, was in love with commodities and commodity stocks, super, grand super cycle and everything like that. And, the oil shares and the miners were the stars for quite some time, and they're really getting clipped. Is this going to be a break to buy in the energy sector and the mining sector, this recent pullback? You see anything there?
It's been interesting, especially as of late last week. we saw such broad participation on the downside, and that included all these commodity related stocks and actual commodities.
Freeport.
Freeport
got bludgeoned.
Newmont even. The worst performing sector in the S&P 500 on Friday was the materials sector, which nobody really seems to talk about that, but I just thought that was kind of interesting.
Well, they love them.
People
still love, I mean, that's commodities haven't been more fashionable since the 70s. So
down 3.7%.
People are learning the lesson that they correct too. So I don't know about you. I just see this as a breather, not the beginning of a bear market in commodities, but a well-deserved correction anyway.
Yeah, agreed. And here's the uptrend on the monthly chart of crude oil. And what we're seeing, I think, is the necessary relief from what was a pretty prolonged overbought condition. We've actually been more constructive on energy and also materials, especially in relative strength terms. But we suspect that we'll get this pullback here. And, people feel like they probably can't hide anywhere if the S&P 500 is going to break down. I don't think people are going to feel much safety, except perhaps in precious metals, as you know. The inverse correlation is not very strong between gold and the equity market, but gold does, of course, have that kind of safe haven property and might be a place to at least park some money.
Gosh, your cloud support in crude, probably because of the aberration in 2020, it comes in all the way down at like what, $10?
Yeah, I'd probably ignore it. It's because it's been more range bound.
It drops off a cliff. Looks like Wile E. Coyote.
And I have to show you, this is interesting. On the cloud itself, this is something we've been really watching very closely. In the cloud, it's pretty interesting. Bitcoin. I don't know if you were going to ask me about it, but look at this here. You see this second week below. So if it confirms below about 40,000 this Friday, or actually at the end of the week, that would be a pretty big cloud breakdown for Bitcoin. And naturally, Bitcoin's had this positive correlation to metrics like the NASDAQ 100, and it's just being treated like a risk asset here.
It's a stepchild now.
Mm-hmm.
All right. So under cloud support and forecast for rain, do you have any major support levels you'd look at if we get this breakdown?
Bitcoin? I always gravitate towards, certainly previous lows and highs. And that's why I do think some people are going to focus on the 30,000 area, just based on the lows from back in here.
Right.
But with the Fibonacci's, we think it could be a bit worse than that, especially because these things, the sort of high beta nature of the cryptocurrency space. This 27,200 level is a key Fibonacci retracement level that we're tracking. So we're using that as a gauge of secondary support that would be targeted by a breakdown. And you can see that the relief rally did actually generate an overbought condition on the weekly chart. And that, of course, is not a positive when you see it stall near resistance.
Like that chart, Katie.
Yeah.
I'm trying to think of what we haven't talked about. Anything else on your mind?
I should mention it. We just launched an ETF.
I heard. Congratulations.
Thank you so much. Yeah, we're really excited about it. And it's really kind of interesting because it's systematic. It's based on our methodology. The ticker is TAC, or TACK. And the holdings in TAC right now, they really lean very defensive. So it's not like wholly risk off at this time, but it has the ability to move from sectors, from a top-down perspective, into treasuries, into gold. And it's done that partially. It's about 25% exposed to treasuries, short-term and long-term, and gold. And then the sector exposure leans a bit more defensive too. So with that, you've seen, this is the ratio versus the S&P. You've seen it outperform, of course, in the weaker tape.
Oh, that's really something. Listed where? NYSE?
NYSE ARCA.
ARCA. Okay. Mm-hmm. All right. Well, I think I'll buy some.
Great.
Knowing about your management.
I think it's, it's a great way to get the U.S. large cap equity exposure, but with the asset allocation piece that helps you avoid some of the big drawdowns. It's a very long-term strategy. And, when the market is working, it should leverage that by being in the right sectors, because we all know that that's one of the best ways, I think, to outperform the S&P 500 is having, the sector momentum and relative strength on your side.
And betting on the jockey instead of the horse. How about that? So really wish you a lot of success with that, Katie. And
thanks, Dale.
Really appreciate you coming by. You give
Of
us,
course.
in such a expedient manner, you give us so many good looks and things to consider. I can't think of any asset class that we haven't covered. We've covered crypto, covered S&Ps, commodities. I think we got the job done in record time, and not because I was rushing you or anything, just that you're good at what you do.
Thank you, Dale. I appreciate it.
All right. So we'll be talking later this summer, hopefully, Katie. And everyone check out Katie's ETF, tack, which means, when you're on a sailboat, you have to tack depending upon the wind, right, Katie? I just gave you a deadline.
That's right. Yes, there is that sort of analog to the sailing and the nautical sort of navigating the choppy waters of the market.
Yeah. Well, that's what I'm saying. You bet on the captain. And I've seen Katie's work long enough to know that I'd still wear a life preserver, but I'd get on her boat anytime. So thank you, Katie. Appreciate it.
Take care.
All right. Katie Stockton, everybody. Take it to heart. Fade Katie and her ideas at your own peril. So remember, everyone, don't just count your pips, count your blessings. We'll be back tomorrow. And you could join the team in just about a half an hour for the morning edge. Want to remind everyone, if you're having some good consistent weeks, where you're up 1%, 0.5%, you put a few of those weeks together. Just imagine having more equity to trade. It takes money to make money. I know, because when you're undercapitalized, every trade is life or death, and you're emotional about it. And that's your biggest hindrance to trading. It's not the signal, it's all in our heads. So everyone have a great week. Have a good Monday, and we'll see you all tomorrow. I will. You'll see the team. Thank you very much, Paul. See you, Monica. See you, Sonata.